We welcome in Satyam Panday, Chief U.S. Economist at S&P Global Ratings. Thank you for being here. We've had obviously a ton of data. CPI comes in hotter than expected. A lot of folks obviously noting that the Fed will be looking more at the PCE. Maybe the CPI was one off. And some of the other data that has come in less hot in the last 24 hours. What's your big picture thought here?
Thanks for having me, Nicole. When you think of, I think it's all about the disinflationary process that we've been going through currently that really sort of builds the expectations for the interest rate profile and the other things as well. But it's a reminder, this whole disinflation process is that it's going to be an uneven one. This latest CPI report from Monday, basically the relative price adjustment is playing out against a backdrop of a fully employed economy. Beneath the aggregate, you can see the strong divergence between core goods and core services. As always is the case, when the goods prices come back down, which it has recently in the US, stabilize and even in a deflationary, it does provide more of a sort of a relief on the service side as well. If you just think about it in terms of the squeezed margins of the service providers, that does have a little bit of a relief. And so it's sort of a good news altogether in general, but still, I think we're in for a bit of a bumpy ride, at least in the first half of the year. That said, I think, do we want to overreact to one data point? No. I think there is the stability of inflation expectations. That is good news that sort of holds our own expectations that the first half of the year we'll probably see inflation on the PCE level between 2 to 2.5% by May and June.
Right, right. When we take a look at retail sales today, and it'll be interesting how it factors into the next CPI print. Auto sales were one area that actually pulled back, plunge. Retail sales actually pulled back. And some of the folks are sort of scratching their heads because you had December, which was revised, but showed a strong number of plus of 0.4%. And so, what's going wrong? Was it the weather, or are maybe people having a holiday hangover? What's going on here, and how do you feel about the consumers' ability to spend in the next few months?
I think all of those points that you just made, the weather, a little bit of a holiday season payback in the next, month after December. I think all of those are, playing here. Again, at the end of the day, the consumers, as long as the job market is holding up well, the consumers have money in their pockets. They have seen real wage gains in the last year. So those are factors that support consumer spending in the near term, at least. We also saw the initial claims of unemployment insurance come out this morning, and it still keeps holding at the historically low numbers. So all in all, it's still a positive outlook for the consumer spending, but there are certain things that were there to provide that tailwind last year, like the excess savings, some of the cheaper credit, those are gone now. So those would be something that is not going to be part of the story anymore in the consumption side of things. And it's more going to be just about your disposable income and your disposable income based consumption. So there is a little bit of a fade in consumer spending growth itself this year.
What do you think about jobless claims, which actually fell to a 1 month low of 212,000? What are we thinking there? Are we thinking the layoff situation is still not a big deal?
So there are two components to that report. One is the new layoffs, and one is the continuing claims, right? So the new layoffs are the ones that are, going into the labor department and saying, you know what, I just got laid off. So those numbers are holding rather low. It doesn't show any red flag. But on the other hand, when you look at the continuing claims, they have drifted upwards in the last 6 months or so. And that sort of gives you a pause that perhaps the labor market, when you are laid off, it's not as rosy as it used to be in the first half of last year. So people are finding longer time to find new jobs. It is getting harder to find new jobs. But those who had their jobs right now, at least they're not being laid off. They are keeping it as is. It's an interesting dynamics that's playing out.
Yeah, and I know, we were also taking a look at industrial production, and you felt that there was maybe a little bit of a recovery that could happen in the industrial sector as well. Satyam Panday, thank you. S&P Global Ratings, thanks for being with us today.